Hi, Andrew Bell here with you. I thought it really appropriate to do a quick roundup at this point in time. There's lots of significant news that impacts on the real estate market. We'll get back to a further detailed look at the Gold Coast property market in our next report. Up first is last week's drop of 0.25% in official interest rates. This is the fifth rate cut since November last year, which has seen rates now fall 1.5%. Each 0.25% drop in interest rates slices about $60 a month off the interest rate cost of an average Australian mortgage. Most economists are still predicting further interest rate falls to come. It's not a great reflection on the Australian economy, but certainly great for the real estate market, as interest rates and lower interest rates are a stimulant to buyer activity. Loan rates that are on offer today are about 75 basis points below their 15-year average. That's quite amazing. Now, the September RP Data Rismark Home Value Index marked the fourth consecutive month-to-month rise in home values, which is further cementing the fact that a housing market recovery is underway. Capital city dwelling values rose 1.4% over the month of September alone. Now, that's the largest month-on-month rise recorded since March 2010. The figures throughout Australia vary, and whilst the Gold Coast still remains a balanced market, it is evidence that my prediction in January property report this year that our market was bottoming has now come through with statistical evidence. RP Data just released statistics showing that the level of vendor discounting has been trending slightly lower over recent months. Now, naturally, most homes are listed at a price higher than the property ultimately sells for. But the gap between the two is closing. Some might argue that the sellers are listing close to market value, whilst others would argue that buyers are paying slightly better prices. Our evidence is that it's a little of both. And as a result, the days on market are declining. A new report confirms Australians are still paying down their mortgage at record levels. It's great on two fronts. First, it's reducing mortgage stress risk, and secondly, providing people with greater equity and hence capacity to make their next real estate move based on their own money rather than borrowings. It's also great to see latest figures which shows population growth is starting to rise once again. It is really an essential ingredient for the real estate market. First home buyer activity is a good indicator of the broader market. And the first home buyer activity on the national level increased 1.7% to 17.3% in July. And that's the highest level in 2 years. I'm sure when we see the August and September figures, they will be up significantly as well. Vacancy rates on rental properties have dropped for the third month in a row. Every capital city is recording vacancy rates under 3%, and the current rental market is predominantly in favour of the landlords rather than the tenants. It's interesting now that with falling vacancy rates in most markets, we're starting to see rental rates rise. This is happening at the same time that interest rates are falling. And so we're now getting into a scenario that it's cheaper to pay interest on a mortgage than it is to pay the rent on the average property of, say, $400,000 value. There has to be a tipping point that'll drive even greater first home buyer activity. What's been missing for some time is consumer confidence. However, the Westpac Melbourne Institute of Consumer Sentiment Index argues well for the current market, with the time to buy a dwelling sub-index rising 7.6% in September alone. That's before the most recent interest rate fall, and talks of further falls coming. Interestingly, consumers are now marginally more confident about buying a house than buying a car. Two Gold Coast updates. First from the Gold Coast City Council, and so really good news. Our Gold Coast unemployment levels on a 12-month average have dropped to 5.8%. The quarterly average is even actually lower, but we'll stick with the 12-month average to eliminate seasonal factors. Second, a report out this week is just simply sensational, and that is that our tourism is back big time. School holidays just finished last weekend with 29,000 people visiting the Gold Coast for the weekend alone. The accommodation industry reports a 16% rise in bookings for the entire holiday period, and retail shop traders reported the best trading in 3 or 4 years. Very encouraging in the lead up to the summer Christmas holiday season. And on the real estate front, we can provide pretty good report card across all of our 15 offices. We're seeing incredible sales activity so far this spring. Using our Southport office as just one barometer, This time last year they were averaging about 2 sales a week, yet in the first 5 days of October they've recorded 11 sales. That's just over 2 a day. Even with Ray White Marine, the activity flows. 7 boats went to auction last week, 2 sold beforehand, 3 went under the hammer, with 1 selling for $1.22 million. Now you can make what you like of all of the above figures, but across just about every front, the lights have switched from red to green, and the statistics are on the up. I'll be back in a fortnight with lots more Gold Coast property information. Until then, regards for now. Thanks for your time.